Welcome back. You're watching The Money Show with me, Kavita Thapliyal. There are plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through all of this? We have on board Gautam Kalia, and just in case you want to send us your portfolio queries, you can WhatsApp it on 865-797-4571. You can also email us your queries on The Money Show at etnow.tv. So Gautam, we have the first viewer online with us. Kiran from Pune. Kiran, hi, good evening. How are you?
Hi, good evening. Yeah, I'm good.
What do you do professionally, Kiran?
I'm working in the private sector.
All right. So you want to start investing in mutual funds, is it?
Yes.
Okay. Before that, you've not invested anywhere in the markets directly, or you have any other investments? Nothing at all?
No, nothing.
Can I know your age?
33.
All right. So you want to invest specifically for 10 years. Any specific goal, financial requirement that's coming up in 10 years?
Nothing as but like the excess funds. I wish to invest somewhere to get the greater gains.
Okay, so I'll just take your goal as wealth creation in 10 years. Right now, you can invest 20,000.
Yes.
That's right? Okay, any particular corpus that you want to achieve in 10 years? Nothing of that sort?
Nothing. But the greater will be good, like that.
All right. Thank you so much for trusting us with your investment journey. You are investing first time. So Gautam, there's a lot that you might want to tell Kiran, but given the time constraints we have, what will be your suggestion?
So Kiran, first of all, congratulations for at least deciding to take this step. Hope you'll take the step. There's a lot of discussion, debate that happens within the mind and with friends and family before people actually start investing. But actually taking the step, then just it kind of snowballs and then gets you going. Success leads to more investments. So I'll just quickly tell you what I think you can do. One of the things you can do is you can start with a portfolio which has a little bit of equity and some debt. So you can put in about 8,000 rupees in Mere Asset Large Cap Fund, 6,000 rupees in HDFC Large and Mid Cap Fund, and about 6,000 in a dynamic asset allocation product like ICICI Prudential Balanced Advantage Fund. So if you start with these funds, you'll get a little bit of stability because of the debt allocation in ICICI Prudential Balanced Advantage Fund. And you'll get more bias and focus towards the large and large mid space in equity through the other two schemes. So this will total to about 20,000. Just keep in mind, please stick to this journey. You're only beginning. The longer you stay invested, the better it is for you. So if you have that 10-year horizon in mind, fantastic. But the key is to stick to it. The funds can change. One fund can be replaced with another fund over time. But as long as you stay invested in the asset class, that's when you are able to see the benefit of compounding returns.
Gautam, also you might want to stress on having a specific financial goal. I mean, we don't know what's his current status in life, but as you grow, you might have financial responsibility. Your income also might go up, but then it's very important for an investor to align the right kind of financial goals, or at least the necessary ones that you might just see coming up in future.
Yeah. So financial goal, while it's excellent to kind of have a plan saying, okay, this money will be allocated for, let's say, house purchase, or for my retirement, or for my child's education, or for, let's say, buying a car or anything like that. The key advantage of actually having a financial goal tagged to any of your investment is that then you don't deviate from that plan. Right, because then you are able to resist the temptation of other investment opportunities that may come your way, that may derail you from the plan that you put in place. So it kind of reinforces, okay, I've got this plan, I need to hit this number, and I'm not going to let this plan get impacted for that new exciting new investment opportunity that you may come across maybe 3 years, 4 years from now. For that, you keep a separate allocation. So really, that's what helps you when you start off. And I would suggest that you talk to a distributor or an advisor and get a in-depth financial plan made for yourself.
Maybe you can send us your question once again. So there's a large cap fund recommendation to you, large and mid cap, and a balance advantage fund. Thank you so much, Kiran, for sending us your query. We have Mr. Sushil Kumar Bhatia online from Delhi. Hello, Mr. Bhatia. Good evening. How are you doing, sir?
Good evening. Fine. Thank you for taking the question.
Thank you so much for sending us your query. You have ICICI Pru Blue Chip, you have a flexi cap from the same AMC and a multi cap from same AMC, and you might have your savings bank account also in the same AMC, is it?
Yes.
All right, so you don't like these funds anymore? You're not happy with the performance?
See, I'll tell you, I invested lump sum around 50,000 in flexi cap, but that has only given me 5% return in flexi, ICICI Pro flexi cap. And large cap, that is blue chip, has not given me more than 10%.
Okay. All right.
I've been investing regularly for almost now 3 years in blue chip. So I want to know whether my fund selection is correct or whether I should go to some other funds.
Okay. You don't see any problem of having 3 funds from the same AMC, sir?
That is because the convenience that they are helping me in making the SIP. That is because of the convenience I am using same fund. Otherwise, if any other fund house does the same for me, I am happy to go with them.
All right. So even if you're investing in some other funds, it is as convenient as it is in the funds where you have a savings bank account already. So it's just a matter of convenience over here, Gautam. There's no such other logic why he's picked up the same funds from one AMC. But apart from that, what is the problem in having just one AMC funds in your portfolio when you talk about the philosophy of an AMC or the kind of positioning they have? How does it impact the fund strategy or maybe the way funds want to work or allocate their exposure?
Right. So, Kavita, basically, while AMCs strive to have a variety of styles and different fund managers have their own approaches to managing money across fund styles and fund categories, and you can see here like blue chip operates in a separate segment compared to, let's say, a flexi cap, because flexi cap can go into large, mid, and small, and the fund managers are also different at times. What happens is you don't get access to completely different styles or approaches, or let's say best practices that other established fund houses may also offer. And sometimes you can end up with like a group think, though there are enough checks and balances in place within most of the large AMCs to make sure that whatever the top ideas are, they are allocated to appropriately in different funds. So they understand that, okay, this idea is more suitable for this specific fund A, and this idea is more suitable to fund B. So while they try to create that differentiation, it's always better for an investor to have a little bit more diversification in the basket to get exposure to different, completely different approaches and philosophies within, across fund houses. And that's what my suggestion would be to Mr. Bhatia, that maybe you can look at diversifying the portfolio. Having said that, I just want to first preface that your experience of a 3-year SIP return being 5%, 6% is pretty much in line with most SIP investors who've not really seen much returns, maybe high single-digit returns or low double-digit returns at best over the last 3 years, because the underlying market or that segment, that large cap segment or the small cap segment really hasn't delivered significantly. So that's the reality of the market. You're sitting on a point-to-point basis. If you look at performance, last 3 years haven't really been that great in terms of overall returns. So you would have had that same experience had you, if you had diversified already. But given that, going forward, still I would suggest that you look to diversify. What you can do is move your ICICI Prudential Flexi Cap to HDFC Flexi Cap, and the ICICI Prudential Multi Cap to the Kotak Emerging Equity Fund. So that way you have diversification across different fund houses as well, along with the fund managers.
All right. Mr. Bhatia, anything else you want to ask?
No, what I want to ask is that whether balance advantage fund will give better return as compared to flexi cap.
Okay. So balance advantage fund by its very nature will have a debt allocation to it. So there'll be more stability. And with debt yields high historically, relatively now, you'll get maybe a 6-7% yield from the debt allocation as well. So there is a little bit more stability. But if the market rallies from here, then the market movement capture will happen more with a flexi cap fund. So if your investment horizon is more than 5 years, then you should look at staying invested more in equity. So that's why you should, my suggestion would be that you stay more invested in like a flexi cap over a balance advantage fund, which is a little bit more of a defensive play. That defensive play will yield you more stable returns, but the expected return is lower than a flexi cap.
Thank you, Mr. Bhatia, for sending us your question today. All the best with your investments going ahead. Gautam, we will take the question of Swapnil Mohapatra, and he says that he wants you to suggest some good index funds.
Right. Swapnil, I'm sure you know that index funds are passive in nature, and they try to mirror the underlying benchmark, which is the index. So what you should be looking at is like a low tracking error of the fund and a low cost of the fund versus the benchmark. I'll give you a couple of names that you can consider. One is the Nippon India Index Fund Nifty 50 Plan, and the other is the SBI Nifty Next 50 Index Plan. So these two you can consider. I think gradually I'm seeing a lot of clients, a lot of investors also saying that last 3 years not really made that much return. Maybe if I go for low cost funds, I'll probably be able to save some cost, and that will yield to higher returns. But in the process, they sometimes also end up missing the forest for the trees, because active management can yield alpha, and if your fund selection is good and consistent, you can actually beat the benchmark at a portfolio level consistently.
All right, we move on to our next viewer. And we have Subhash Shahani's question. He says that he's a senior citizen, 76 years old, and he's investing via STP in the funds which he's mentioned: ICICI Balance Advantage, Kotak Balance Advantage, ABSL Balance Advantage, Mirasid Blue Chip, Mirasid Tax Saver, Canara Robeco Emerging Equity, and SBI Focused. Now, exactly what he wants to know from you is, how are these funds? And it's the STP of 10,000 rupees that he is doing. We don't have him on the phone line. Otherwise, I would wanted to know as to what is the intention of this portfolio, Gautam. But how can you guide him?
Yeah, so Mr. Sahni is basically asking whether his portfolio is okay. Does he need to make any changes in the schemes? So Mr. Sahni, your portfolio is fine. I think maybe just one change that I would suggest. It's not a major change, but you could consider it, which is looking at moving away from SBI Focused into another dynamic asset allocation, because basically your age. So you could look at moving SBI Focus scheme to, let's say, a shift to like a ICICI Prudential Balance Advantage Fund. And the reason why I'm saying that is only because of your age, and at that age, maybe you want to look at a more defensive portfolio. So basically increasing the defensiveness of the portfolio. If that is more comfortable to you, you should consider that.
Okay.
But otherwise, schemes are fine.
All right. We move on. Anand Kumar from Delhi, and right now he's investing in Axis Small Cap and Kotak Emerging Equity, 3,000 each since last 5 years, and these are the only two funds he has in his portfolio. Again, we don't have him on the phone line, so we don't exactly know what's the time horizon or what are his financial goals. But what do you think? He needs a balanced portfolio. Can that be done?
Yes. So Mr. Kumar has exposure only to small cap and mid cap. This is what information I have in front. Maybe he's got some large cap, but really, if he's only got these two funds, then he's investing only in small and mid cap. So he needs to have more exposure to large cap as well to kind of round out his portfolio. So my suggestion would be that he shifts out of the 3,000 rupees per month that he's putting in Axis Small Cap, maybe shift only 2,000 rupees to the large cap scheme of ICICI Prudential Blue Chip Fund, and from the 3,000 that he's putting in Kotak Emerging Equity, move 2,000 of that to the large cap, the flexi cap scheme of HDFC Flexi Cap. So what happens is that way he's adding a little bit more large cap bias to his portfolio, which currently is non-existent, and gradually commit more amount overall to his portfolio, because finally it should be a meaningful goal that he's trying to achieve through this investment. So 6,000 rupees will probably not yield that kind of corpus unless it's for a fairly long period of time.
Gautam, last question to you is from Prem Kumar, and he's investing again in one AMC's funds: Axis Blue Chip, Axis Small Cap, Axis Mid Cap, and he's been investing since last 2 years, and time horizon is 10 to 15 years. Although we are not aware of the corpus, but then total 30,000 SIP that he's doing.
So Mr. Kumar has put in his request that he wants to plan for his retirement, and that's why he's doing this. So that's fantastic that there is a goal associated with his investment. Again, all schemes from a fund house, there is always this risk of groupthink or same fund manager style, or overlapping of stock ideas. So to ensure that there is more allocation, more diversification across AMCs, as well as a little bit of more allocation change, because there's a significant allocation here to large cap. There's almost 70% of his allocation happening to large cap, with 20,000 rupees going in Axis Blue Chip out of 30. So suggestion is that shift 3,000 rupees per month SIP to the focus scheme of Mirae Asset Focus Fund, and 6,000 to the value fund of ICICI Prudential Value Discovery. So you get instead of just the guard growth at reasonable price strategy, which most of these funds are following, you get a value style investment also, diversified option within the portfolio. And remaining you can move to the large cap scheme of Kotak Blue Chip Fund. So these are the three funds that you can move that 20,000 allocation to, and the Axis Small Cap can be switched to the SBI Small Cap Fund because of fund selection reasons. So that fund we prefer basis our research. Axis Mid Cap, please continue.
So now also one thing, Gautam, because see, he's got a good amount of investment, he's got 30,000, and to divide that, right now the strategy is of 3 funds. I mean, you've added more, but then can we have like 4 to 6 funds for the amount of 30,000 in your portfolio?
So that's a very interesting question, Kavita, because so I differ a little bit from most advisors here, people from the industry, because it all depends on the overall wealth of the individual. So if the overall wealth of the individual is, let's say, 10 crores and he's putting in 5 lakhs a month in SIP, he can have a concentrated portfolio of 3 funds. He doesn't need to have a diversified portfolio of 15 funds or over diversified portfolio of 15 funds. Similarly, if someone is earning 1 lakh, 30,000 rupees is a fairly large sum, to put in SIP. So I think it's all relative, and it boils down to the specific situation as to the number of funds, and it's generally a consultative process. But I prefer not to go beyond 8 to 10 funds. I think 10 is probably the outer limit, and not because of the reason that most people talk about, which is over diversification. I think it just becomes tougher to manage and track performance when you have so many funds. It's fairly easier to have a concentrated portfolio, maybe 6 to 7 funds at best, regardless of your overall wealth.
Gautam, that will be all. Thank you so much for removing time and helping our viewers with their financial portfolio.